Hello everyone, this is Capi and we are here for another English video. That is something that we are starting to do more often. We did some videos in the past, so recently, for example, we did another one on Kistos, and now we have here another opportunity on the North Sea, also gas on the North Sea, that is IOG. So we met with the management like a couple of weeks ago, and it was a really good meeting, really interesting meeting with them. And then we made a video in Spanish, of course, as we usually do, but we also thought that it would be a very good opportunity to do it in English. So I am here also with my colleague Alejandro. So
Hello, good morning, everybody.
how are you doing?
Fine, thank you. Excited to do this video.
Yeah, and I must say that Alejandro is, at least in our community, in Momentum Financial, is the person that for sure knows more about IoT. So there is literally no doubt about it, and he's not only the master and commander of IoG, but also the person that put us in contact with them. So we are very thankful to him, and of course he needed to be here. So really excited to start with this, and before we start, just be aware that this is not any kind of recommendation to buy or sell any kind of company of the ones that we will be discussing here. So please do your own due diligence, and the investments that you made, it will be your own responsibility. So let's start with the presentation. So, what is IOG? So, IOG, as I said, is a small company that is listed in the AIM in London. The ticker is IOG as the name of the company. So, when we say it's small, the market cap is around 150 million pounds, more or less. One of the particular things about this company is that they have a joint venture with CER, that basically is a subsidiary of Berkshire Hathaway and they just work on the gas production and exploration in the North Sea. So let's continue. And here is the board of the company. From those five people that you can see there, I was lucky enough to meet with Andrew, the chief executive officer, and also with Rupert, the chief financial officer, and on top of that, the head of the investor relations. That is the one that you have a really good relationship, right, Alejandro?
Yeah, James is really a
Yeah.
nice person to work with and very diligent.
Yeah, and I must say thank you to him because he has been always very supportive, of us meeting with him. So thanks to James too. That unfortunately he's not in the picture, but who knows? Maybe he will be soon here, on the board. We wish him the best at least for that. Okay, and now let's focus a bit on the partnership with CER. Coal Energy Resources is the name of the company. So as I said, it's a subsidiary of Berkshire Hathaway. It's a company that have interest in oil and gas in UK, Poland, and Australia. It's quite a big company. So basically, the kind of agreement that they had with IOG was that, of course, the problem with this kind of exploration companies is that they can have the assets, but in order to explore and to start producing, they need, of course, a lot of money. So these junior companies, they have always a problem with that, of getting that kind of money. So this is why there are companies like CER that put the money and share some of the risk, and then of course they take part of the profit. So the way it worked, and I will speak just for the phases one and two, and then if you want to add anything, Alejandro, feel free to do it. But basically, CER was putting some money up front, that at that time IOG needed. And then what they also agreed is that 80% of the capex for the phases one and two, it will be covered by CER. So they are putting more capex, and in exchange to that, they are receiving, at least for phase one, a royalty of 20%. That is what they need to pay, ERG needs to pay to CR. And then for the phase two is slightly different. And on top of that, they have an area of mutual interest agreement that they have signed, that basically the idea is that if IOG is able to find any other assets that they want to explore that are not part of those phases, they will probably do it through the joint venture with CR. And I think there's another slide here, yeah, where we can see basically this agreement that they signed, and as you can see, there was it was a farm out of 50% of those assets. CR paid 40 million cash, much needed on that time for sure. And then in terms of the capex, as you can see, taking 80% of the cost, up to 60 million for phase one and up to 65 million for phase two. So I think that the agreement was really good for both parts, kind of win-win situation. Like CR is gonna make money here for sure, and IOG needed a reliable partner, and for sure is something that they found here. I don't know if you want to add anything at this point, Alejandro.
No, it's important to stress that this is a mutual agreement. So any project that SEER commits to participate, they will bring IOG in uh, using their experience from their team of geologists, or even the experience from the operational point of view. So it's great to have this kind of relationship with a big company that opens a lot of opportunities in the North Sea.
Yeah, and one thing that is also important here is that based on our conversation, and this is why I want to stress out the importance that is to speak with the management, because you can see a lot of things in presentations, but you really need to speak with the manager to understand better some things. So all I can tell you is that the CR data, you have it there in several presentations, several RNS, etc. Where they provide all the information. But I was asking them, Andrea and Rupert, like, what is the feeling that you have? How is it going with CR? And they were really, really happy with them. Like, they said that the partnership is working really well. The conversations with them are really good, and it's the kind of feeling that IOG is really happy with CR, and CR is really happy with IOG. So it's the kind of partnership that for sure has been a success. Okay, and speak more about the bond, because they have a bond that it happened, when they signed this partnership with CR. But now let's focus a bit on the assets, and the facilities. So one important thing is that IOG, they have their own reception facility, like on the land. As you can see on the picture, there is a cell terminal there, and then there is a big one from Perenco. And the one that you can see at the bottom right, the Saturn Barnes reception facilities. So that one is from IOG. They are the owners of that. And the thing is, like, the gas is coming there, and then from there is going through the Perenco terminal. So all the big stuff is happening basically in the Perenco terminal. And if I'm not wrong, Alejandro, is Perenco the one that is also managing the facility from IOG, right?
Yes, they're in charge of operating that reception facilities, and they are the link between IOG and the national gas grid. It's also important to stress that IOG management was very proud of their infrastructure, because it opens them a lot of opportunities, being in charge of the transportation of the gas from other platforms and fields, because they think that their current pipeline operates at much higher pressure than any other in the area. So they also think it could be an area of growth in the future.
Yeah. Okay, and now here we can see all the assets, and probably this is one of the key slides through this presentation. So it's important that people understand the different phases that we have. So the phase one is the Southwark, Blythe, and Elgood. So at this point, they have work in Blythe and Elgood, the ones that you can see. I don't know if I can do it. Yeah, here. These two are the ones that are currently pumping the gas at this point. And then we have Southwark, that is here. That is the next one coming. That it should be coming. We will speak later, but it should be starting to produce gas in Q4. So that is the phase one. Then you have the phase two that they split between 2A, 2B, and 2C. So the 2A is Nailsworth, that is here. So as you can see, it's an area that is completely different, to the other two. Then the 2B is Goddard, that you can see also here at the top. And the 2C is Elan, that you can see is also in a slightly different area. And on top of that, you have this phases three, that is all the southern hub, and phase four, that is the Panther and the Grafton. So the important thing that people needs to have in mind, and mainly people that probably are not that expert. I mean, I'm not either, So the idea, or what I want to show here, is that the assets are huge. Like there are so many assets, they will need like I don't know, like going to phase four is probably at least 10 years, something like that, Alejandro.
Yeah, it could be.
So it's not something. I mean, people needs to understand that you need a lot of capex, and you need to even lag. Sometimes it's not even the capex, because you need to do the drills, and you need to check that what is down there is what you think is down there. So it takes time, and it takes effort, and it takes a bit of lag. They are just starting, but the idea is that the portfolio of assets that they have at this point is huge.
Yeah.
So as soon as they start having the cash flow that they are starting to have now, the possibilities to invest in additional capex are really, really high. So it's different to other companies that maybe they have producing assets, but they don't have that many assets to explore, so they need to go through M&A. In this case here, there is no real need for M&A, because they have so many assets that they need to develop, that in a way it makes more sense to spend the capex on that. At least that's the way I see it.
Yeah, it's important to know that this is not just a company with a lot of fields, a lot of growth opportunities, but a company that is actively trying to pursue them. They want to develop each of these. They have a clear roadmap. They have the intention of going first into network, which we expect to have the decision on that platform to be ready by the end of the year, and they will follow this plan to complete all this development. It's not like other small oil and gas companies that have lots of licenses. They don't know how they will be exploring there and developing them. In this case, we have IoT that has already a revenue and that's growing, and they have color energy support. So that's key to know that this is not just a growth opportunity, but actual growth that will happen when the moment arrives. But it's going on and on, this step by step. Now we have software coming in line by the end of the year, but they already have the plans to go into network and keep growing from that.
Yep. So a lot of good things here coming, basically. But as I said, the ones producing are these two, Good and Blythe, and Southwark is coming, and Southwark can be something quite big. We will see later. And here just a picture, so where you can see in more detail the stuff that they have. So you can see that Blythe is like a kind of big platform, and the one in Elgood is a small one that is underwater, right?
Yeah.
Yeah,
Yeah.
and then you can see the new one in Southwark. And all that is going to the Backton terminal. That Backton terminal is what we saw you before, the one that you have on land, and the one that then is managed by Perenco. Okay, so let's talk a bit about the assets that we have producing now. As we said, it's Blythe and it's Elgood. So there have been problems and failures at the beginning, starting with some mechanical issues in Blythe. So people have an idea is like IOG is not directly managing those assets. Like the people that is working there is not in the IOG payroll. So we understand. They have a company that is ODE. So ODE is the company that is operating the assets and is doing all the maintenance there. So there has been some failures and delays since mid 2021. That has been probably one of the biggest problems, right, that IOG has had in the past, let's say, 2 years.
Yeah, it's important to stress that North Sea is difficult, oil and gas is difficult, We saw some teething problems at the beginning, uh, during also the resurrection of software. We have experienced on the delays, and the EOG management team, what they transmitted to us was the message that they are actively working with ODE. They want to improve together, both IIG and ODE. They have ongoing conversation on a periodic basis between the operational but also the senior teams. So we saw some interest, and we somehow see the intention to solve all these technical issues and have a steady production from this moment onto the future.
Yeah, basically we ask, in the same way that we ask about CR, we ask about ODE and how was the relationship with them and what was their view. So, yeah, basically what they told us is that there is room for improvement, and that in the past it's true that maybe they were not that happy with the work that they were doing, but that they have the feeling that things are improving, you know, with the with time they are starting to understand better the way that each other works, each of the parts. So they are kind of, I would say that they recognize that there have been issues, but they are kind of optimistic. I would say that way. And you can see also that the uptime, for example, here in the graph in June of this year is around 90%. So like things are getting better, definitely. Yeah, and well, here we can see the contract with them that is from even 2017. So it's coming from a long time ago. And here about the performance, I don't know if you want to stress anything from this slide or highlight anything.
Just to remember everybody that this chemical injection failure that the bike experienced at the during the early days of the production is not completely solved. So there are some time allocated to complete the repair and to put a definite repair in place. So this production, this uptime should improve in the future. So we just have to wait, and maybe in Q4 we see a strong, stable uptime that ensure that we reach the winter time with a higher production level than we have seen so far.
Yeah. Okay, and you can see there, because they did a presentation, an investor presentation recently, and you can see there that they have been giving numbers about production, and for the whole company, and it's interesting because they gave a guidance, right, for the whole year 2022, but that should be including southward too, not only these two, but also southward. So that's definitely interesting. And one thing that is also I want to highlight is that you can see there the OPEX that is around 10 to 15p per term. So what I told them, when I met with them is like, well, this is really low. Like it's kind of impressive, So and they told us, well, yeah, it's low, but we want this to be lower, So one of the things that they told us is that there is capacity for them to have even a lower OPEX. So that is definitely quite interesting, I mean, it's true that in these times where the gas price is going crazy, it's not that important, but it's also good to see that if the OPEX is really, really low, is because either the assets are really good or they are doing a really good work, or probably both. So that is also something to consider. Here it's about the kind of delays that it happened. Like first it was the Q2 21, 22, then to the mid 22. And this is about Southward, by the way, not about Blythe and Elgood, but on Southward, they expected first at Q2 22, then at mid 22, and then things were changing. And basically, the latest guidance that we have at this point is that it's going to be in Q4 of this year, right, Alejandro?
Yeah. So this is the new island. We hope we finally get software in line this year, but they let's see if it's at the beginning or the end of the of the year.
Yeah, and to be honest, it's a big difference, because that, well, usually, the way that this works is that for the natural gas in Europe, in the North Sea, for Europe and UK, there is a seasonality that is very clear. That the gas is usually low in summer and is at high prices in winter. Well, this year and past year is things are crazy. Now we have prices that you wouldn't even have in a very, very hard and cold winter in a normal year, and you have that in summer, in June and July. But it's because all the things that are happening, around the world, like the Ukrainian war, etc., all the problems with the gas supply with Russia, etc. But the thing is, like, there is an expectation, and this is what the futures are telling us, that the UK gas price that now is clearly high, but in winter is gonna skyrocket. It's gonna be crazy. So the difference, I mean, Q4 it's October, but it's also 30th of December. So my point is that 2 or 2.5 months difference of gas that you are pumping out from southward at the prices that you will probably have there. We are speaking about tens of millions, maybe. It's a lot of money. Like, a lot is a lot. So one of the things that we have been asking them is, is going to be at the beginning or at the end? They didn't provide an answer because, well, probably they don't know, because there are a lot of things that, of course, they don't depend on them. And even if they do, probably they cannot tell us, because you never know at the end. Something bad can happen and there can be a delay. But all I can say is that what they told me is, we are really aware of what you are saying, that the gas prices are going to be really, really high and that it's going to make a huge difference. So we are trying to do things as soon as possible. So they are working really, really hard on that. And we have, and this is like what I am telling you now about it. And they have all these drills, the drill campaign, and that has been really good for them, because they had these 5+2 drills, and those were contracted in 2020. So at that time, I think that the prices of the drills were really, really depressed. So the rates are really good, so they use already 6 of them, right, Alejandro?
Yeah, the total contract included 5 and 2 options to extend with 2 additional drills. Right now, we have the 2 drills for Elgood and Blythe. They're right now drilling 2 more in software. The next 2 will be appraisal wells in both in Godard and Kellam. But we don't know what are the plans for the 7th drill. We are for sure, we're convinced. They didn't say anything about this, but we are convinced there will be a 7th drill, because the rates are so cheap compared to the situation right now. This has to be done somehow. In the original plans for software, there will be 3 wells mentioned. It was kind of, the third one was optional, it wasn't clear. We don't have the final engineering design documents, but at least in my opinion, what we expect is that once these 6 drills are completed, maybe they use the 7th drill for software. The platform is prepared to have three wells, so that wouldn't be a problem. And when they complete this 7th drill, they already have the information from the 2 east and west wells. So, in our opinion, my opinion, that information will be key to design this 3rd well and to optimize the production in software for maybe the 2nd quarter next year, something like that. But let's see. They didn't mention especially what will be the plans for the 7th drill, but it's so cheap that they have to use it
Yeah,
somehow.
they are gonna use it, because, I mean, those prices for drills are not coming back in a long time. So it's an opportunity cost really, really high in my view. So for sure they will use it, and they probably are just thinking where, right?
Mm.
Okay. So here we can see the reserves and resources of all those assets, and here is just well, it's phase one and phase two, right? Like Blythe, Elgood, Southwark, and then Nailsworth and Elan. And I don't
Yeah.
know if you want to comment something because it's true that Elgood is really low as compared with the other ones. So I don't know if you want to say something about it.
Ergo has been the most challenging of this so far because it was much smaller than previously thought, and also there have been this problem with the condensate from Ergo that has caused some problems at the reception facility managed by Perenco. Uh, it it called our attention that the production level for the condensate like last a lot from Elgot. They were more or less the same levels that the flow rates, which should be declined quite fast, but they get a very high level. The management, and also there are some information about the software. It's not expected a high level of condensate from software, so we hope that the repairs or the changes in the Pereco reception facility will be able to handle any additional condensate from software once it is put online. But basically, that's it. Network will be the next field to put to put in line.
It looks
Um,
great, Nailsworth, right? In terms of the reserves.
yeah, it's already fully priced, so we don't know if there's gonna be a developed using a platform or just undersea well connected to software. At the beginning, the plan was to have a normally unmanned installation, and now in the last presentation they included the option to use the same approach that for Elgood to have a subsea well. The final investment decision is not just taken. Let's see until the end of the year what they decide. But I don't think that at this moment it's not critical as we won't see Network operating until 2022, 2024, sorry. And I think the attention from all investors right now is put onto software. When will the production start?
Yeah. Okay. So here we can see a bit of the appraisals and all those kind of things on Goddard that they will be doing by the end of this year. And to be fair, I don't know much about this kind of things, so I don't know. I mean, this is the floor is yours, basically.
Yeah, yeah. Goddard is the main reservoir in the northern area covered by IOG. It's important to stress that they are going to appraise this well between the last quarter of the year or maybe the first quarter of the next year. Uh, Basically, this appraisal will de-risk the whole development in the north, which we think is the right approach to follow in the next coming year. So they will confirm what the reserves we have, and with the information we expect to see if they can also appraise or assess the reserve in the flanks that you can see there. It's not shown in this picture, but there is another small reservoir to the south. I don't remember the name right now. I think it's Subsea, or maybe I don't remember the name. But there are three. Basically, there are three reservoirs. So once we have the data from the appraisal in Goddard, we know if the whole area is economic or not to be developed, which we do expect that to happen. But who knows? Next one will be next slide, please,
Yeah.
Capi. Will be Kellam in the south. This is the most representative asset in the south hook for IOG. This appraisal will also happen this year, and as you can see there, there is lots of areas of growth in this hub. So the Kellam appraisal well, we hope to confirm that the whole area is economical, so it can be developed. As we commented before, this could take years from now, but at least we have all all the capacity in place. The team IoT has put in place to develop the previous web platform and now software. It's a continuous work, ongoing work, and we know that they will keep improving and improving all the time. So we expect great things from these two northern and southern hubs.
Yep. Basically, in terms of the way that all that part was, is that it's very, very similar all around, right? Like they have even some parts that they have not been checking, if we can call it that way. They know that more or less is very similar because all the area is kind of similar, right?
Yeah, they stress that the management stress that they have a very good understanding because the whole
Yeah,
area is similar and their previous years of experience have also allowed them to understand very well the different vessel volumes. So the information that they have, the 3D surveys that they have reprocessed from all these areas have provided them a better understanding of the different assets that they already own. So they seem to be quite optimistic about both hubs.
yeah,
You know, it's management of the team. They must be optimistic, but to me, they sounded quite convincing.
yeah. Here also we can see the resources of all of those. But I mean, I'm not gonna go into detail because this is, I mean, we have for some of them even years until we get there. So not something. I mean, like the core thesis here is not around this, right? It's about other things. I'm not gonna focus on that, but let's go now to the capital structure. So as I said, when they signed the contract with CR, also they floated one bond, the one that you can see there. It was a 100 million euros Nordic bond. The rate it was the 3 month Euribor plus 9.5%, and the interests are paid quarterly. So today it's an expensive one. On that time, it was good. So you need to understand that it's a difference. When the company was floating this bond, there were no assets in production, so of course the risk was way higher. But at this point, of course, that they are kind of printing money, we can call it that way, with the gas prices that we have, it's something that is a bit expensive for them. They can call the bond, I think, September next year, right? Or is even September this year?
This year.
Yeah, so September this year, from September, like in a couple of months, they could be able to call out the bond. But what they told us is that basically their initial idea, is to refinance the bond from next year. So that is what they are trying to do. And then in terms of the major shareholders, you can see there that the biggest one is a company that is called LOG. So there is some trouble there, because the problem is that LOG is a company that is under administration. So as you can imagine, you have your biggest shareholder is under an administration. So there is a huge risk that somebody is just deciding to push the button and start selling those shares to pay, some of the debts that that company may have. So that has been always one risk for IOG. But the thing is that based on our conversations with the management, it seems really clear that they don't want. I mean, they are aware of the value of IOG, so they just don't want to sell it for cheap, if we can call it this way. Basically, they will be patient, and in fact, they are not selling any relevant shares at this point. So it is risky, but it's true that they have not been selling any of those shares. Then you have their Lombard, and the thing with Lombard is that they have been selling for the past weeks and months. They have been selling shares. So there is always that point where you need to know how many of them they are selling, because maybe they can be rebalancing their fund or whatever, or just taking some of the profits that they have, because maybe they went in at really lower prices as compared to this one. So it's something to consider, and there is not that many clarity there. And then in terms of the directors and employees, you can see that they have a 1.3% of the company. So clearly they are not the owners or of the company. They have a very small stake there. Like Rupert has around zero point 0.7, and Andrew has zero point 0.2. So they have been hired, to run the company, which is not essentially a bad thing. On that time, probably the management took the decision to take them because they believe that they were very capable to do it. And in fact, if you ask me, I think that they are doing a great work. But it's true that the risk of them not being fully aligned is here higher than in other companies where the management has a higher stake. Takeover here is something that everybody is thinking about it, right? Like the assets of IOG are really good. They are in a very, very sweet spot, in my view, where they have two of the assets producing, and soon there will be three. And Southwark is a really, really good asset. So there has been always that possibility, floating in the air, if we can call it that way, of a possible takeover from other companies. Like it could be Serica, it could be even Kistos or any other company. So I asked them about it, and what they told me is that they don't have a problem to sell if they get a good price. Like they are there to maximize the shareholder value. So if there is a good bet, they will consider that. But the important thing here is that they are not desperate for selling, or they are not even looking for selling. It's not them that they are knocking some doors saying like, yeah, we will sell these assets. So if that is coming, somebody is putting a high price, and my view is that it should be, I don't know your view, Alejandro, but it should be at least 40p.
Difficult to put a price right
Yeah,
now, particularly if we don't have software in line. That's to me is the critical point. So we just have to wait and see, because if software is really good as we expect it to be, the company value can be, and with these gas prices, can be much higher than 40p, 50, 60, who knows? The market has to decide on that. But I wouldn't sell my shares at 40p, to be honest. I wouldn't sell even at 50p. I just wait and wait with my share until the market recognize the value. And some comments from the management of us about this is like, uh, they clearly state that they are there to generate value. And also, when we comment about LOG situation, they say that they have received some interest from other potential shareholders, that asking them to push LOG administrator to sell
yeah, to
the
sell.
share.
Yeah,
Yeah, and they clearly say that they won't do that. They don't want to push any shareholder to sell any stake in the company. They just want to focus on, as we see it, delivering high returns. And also, to protect the shareholder, they say that if any big large shareholder want to sell, they are happy to help them to sell the share, so the share price is not affected. And you can see there also there was this purchase of the CEO, Andy Hockey, when there was some bad news about the production. I also important to stress that the management team, during the hard years in the pandemic,
yeah,
they had this program where they sacrificed their salary, and they got some options in exchange, which I think shows some commitment in the company, which I appreciated a lot when I started the company the first time. So everybody, I think, all shareholders would like to see that the management team buy some more shares when the price falls, like Andrew did.
yeah,
So it will be important to align everybody's interest.
yeah, absolutely. So, and the way I see it, and I think it was Rupert that told me, is like, well, if you think about it, is a good place to be where there is a possible takeover, which will mean that, like for sure it's going to be a price higher probably than the one that you have today, so it's not a bad position to be, basically. And he was absolutely right on that. Okay, so this was really, really interesting. In fact, I think that we were speaking about European and UK gas market for maybe 15 minutes. We were talking, sorry, for an hour or so, and from that hour, 15 minutes were probably discussing the UK and the European gas market. So, one thing that I've been asking to other senior management, from North Sea companies, uh, like Serica, or when we met with Andrew Austin from Kistos, is like, do you think that the gap between the UK price and the European price is gonna close? And it's funny, because both said yes. Serica CEO and Kistos CEO said yes, but on that time the gap wasn't that big as compared with the time that we met with IOG's senior management. So I asked the same question, and I was a bit surprised by the response, because they said that not only they think that the gap is going to close, but they firmly believe, I would say, that in winter the UK gas price is going to be higher, clearly higher, as compared with the TTF, with the European one. So I was really surprised about it, and they were explaining the reason for that. So basically, the thing is like, the way it works in a normal year. Okay, like, I know that we are not in a normal year, and we will go there later, but in a normal year the way it works is that UK do not have a storage relevant one in the country, so they rely during summer. A lot of LNG ships are coming to the country, so they use that gas that is coming from US usually. And as they don't have any place to store it, so they use it during the summer. The rest of that gas is going to Europe through the pipeline that you have there. Okay. Then in winter, the problem is that in Europe there are huge storage systems for the gas, and in Europe is the opposite. Like, basically, what they do is they use the summer to fill all those storages that they have as much as they can. And the way that it worked with Russia is that they had a kind of, we can call it kind of average level of gas that they were receiving through the year. So there wasn't that big difference between summer and winter. The thing is, like, for sure in winter, probably they were receiving less than the one that they were consuming, but they have those storages full, so they can use that part. The problem in UK is that as they do not have that, in winter was the other way around. So it was Europe sending the gas from Europe to UK through the pipeline. So people needs to be clear on that. In summer, UK is sending the gas to Europe, and in winter is Europe sending the gas to UK. What is the problem now is that we are coming at a point where the gas market basically in Europe is completely broken. So think about winter. In winter, UK do not have any kind of storage. They need to rely on the gas that they have from the North Sea, and they need to rely on the gas that they are receiving from US on the ships, and on the gas that they will receive from Europe. But the problem is that Europe is so stressed with the gas that it is very unlikely that Europe will be able to send the same amount of gas that they were usually sending to UK. So UK is going to be super stressed in terms of the gas that they receive. If you think about it, I think what they say, it makes a lot of sense. I mean, I never thought it that way, because, to be honest, I didn't know that in UK it was working that way. But it makes a lot of sense. So, in fact, it's not that, okay, Rupert is telling me that. If you go to the futures, I mean, the futures, and Alejandro, maybe you can speak a bit about it here, but the prices are going insane for this winter in UK. But like, insane means insane.
Yeah.
I don't know exactly if the futures for, let's say, December are already higher for UK than for the TTF for Europe. but at least I think that the gap is already closed for the futures, but not for the spot today in July. So it is something really, really interesting. I don't know if you want to add anything here.
Yeah, basically, they are super convinced. They explain the thesis, which, as you say, is unique so far. I haven't seen the thesis anywhere. The gas prices are much high, even higher than when we met with them. Right now, the future for the UK gas are higher for this winter, which has confirmed the idea that they have. It got us by surprise, but if these gas prices materialize in the next month, we will see that they were the only ones that were right. So it's a clear demonstration that they understand very well the market, how it works, and how weak the position in the UK market is right at this moment. It's a very weak position.
I
Um,
would say even dangerous, like for consumers and for the country.
yeah,
I think they
because
are in a dangerous spot, because now here we are thinking about a company and making money, etc. But you need to think that we are not speaking about, like drinking a Pepsi or something. You don't have the Pepsi, well, that's it. It's not a big thing. I mean, gas is something that everybody needs, and there is going to be winter and people need the gas for electricity and they need the gas, to stay warm at home. So it's not, I mean, it's not a joke, to be honest. And what people do not understand, and this is something that we have commented long time ago. I mean, we need to give some credit to our community momentum because we saw those kind of things months ago. Like things that they on the TV and some people, that they are supposed to be super smart. They are talking to you in July. We have been talking about it in February. So the thing is like in the past winter, we had crazy prices of gas, but we had gas supply. The supply wasn't a risk. For me, this winter, there is a serious risk that the supply is at risk. I mean, like, it's not that, okay, I have the money, I will pay. It's like, sorry, but I mean, there is no gas. So it's looking bad. To be honest, it's looking bad. And but just going back to the company, this is why we said that Southwark, the time that they are putting Southwark online, is that critical because trust me, prices in October, November, December, the MVP is gonna be crazy. Like crazy means crazy. So we are speaking about millions of pounds of difference here. So yes, just be aware
to,
of that.
to add to add some context to how dangerous the position is, the Freeport LNG plant in the US was supplied mainly to UK and France, so they lost that. We don't know when that will be back online because it has been delayed to end of the year. Now they have the other supply, main supply comes from Norway. Norway, they have these problems with the strikes in the OLNG unions. The government has to be involved to stop these strikes from happening, which may be a huge problem for Europe, but particularly for UK, with the situation with the Freeport plant. And also, the British government threatened to stop the deliveries of gas from UK to Europe if needed, which could be also negative for them because if they cut the supplies now, in winter, when they need this gas the most from the storage in Europe, they can see their supply also cut or reduced. So the position of UK right now, regarding the gas market, it's really, really dangerous, as you say. So weak, but dangerous, as you say. So let's see how the situation plays out. But it's obviously that owning some share of oil and gas producer in the North Sea, it will be a very good investment for our investor if we don't see any more taxes.
Yeah. So we will see. I mean, there is no storage, and in fact, there was one from Centrica, the I think it's British, right? Centrica, the company
Yeah.
that they had a huge one that it was closed years ago, and they said that there's no way that they are opening that for this winter. And in fact, if you think about it, even if you open that in October, I mean, you need to fill it. I mean, there is no time, right? So it's people need to understand that those kind of things is not, okay, you open it tomorrow and you fill it in 1 week and that's it. It's not the way it works. Those things takes a lot of time. Before you open, you need to do like a million checks that everything is okay. Then I guess that you will need to be pumping the gas, maybe slow at first, whatever. It takes a lot of time to fill it. So yeah, it's looking bad, guys. That's all I can tell you. Okay, and here you can see the connections with the different pipelines, etc. This is really good. In fact, this slide providing a lot of information. So the ones with Europe, you have the Belgian one, and the other one, the BBL, that is going to Netherlands. So the one to Belgium is around this 20.7. It's like million barrels a year, I think, the BCM per year.
Billion cubic meters a year.
Billion cubic meters, sorry. Yeah. So it's around 20 billion cubic meters per year. And then the other one that is going to Netherlands, that is around the 15 million. And one coming from Norway, that is around 25 million. And then one with Ireland, about 8 million. So yeah, this is gonna be a mess. I mean, I can tell you. And I said this months ago. And we are in UK. I live here in UK. I'm a Spanish, but I live here, and we are in UK in such a populist times that I can see this winter, whoever is the new prime minister saying like, thank God that we did Brexit because now Europe is not sending us gas. We are here. We have cold, and they are not sending the gas. And during summer, we were sending the gas as usual, but they are not sending in winter, whatever. So it's something that I think it can grow here. I wouldn't be surprised, to be honest. Okay, and this is the craziest stuff. And so the futures is just crazy. It's almost 400. I think it's now, well, it's, it, right? Like for December, it's even about 400.
Yeah, it's
400 something.
443, something like that. It was yesterday. So it's more or less the equivalent to almost 180 euros per megawatt compared to the TTF.
Yeah, those prices are just insane. And the thing is, like, the curve that you can see below on the graph below, this is just going up, up, up. In the past month or 2 months. So yeah, these prices. I mean, who could think about that? Like, we would be here, right, in 400 something for winter. Are prices that almost we never saw that, right, Alejandro? Like,
No, it's totally new. The graph for the winter is dramatic, and there is also important to say that we may expect some decision from the politician. Let's see if they impact us or not, because these gas prices are not sustainable for companies, also citizens, when the winter arrives. So we just have to wait and be aware that there are some risk. But these gas prices are historically high, and we just have to expect that we can see a huge return from this situation.
and just to give people an idea, so this was like 250, not even 300. You can see here the spot, and this is March this year. And we don't have here February, for example. It's the same, but probably it went to 300, right? So we are the winter where we had the war with Ukraine, and there was all the kind of panic also that there is not going to be gas, etc. And here in March, it wasn't even 300. If you go to the futures now, the same March for next year is almost 400. Well, this one is from 30th June. We are 9th of July now that we are recording this. For sure, now the March one is going to be above 400. And here was like 280 or something. And the futures are telling you now that you are in 400. So things are way worse than it have been past winter. Also, one thing that I think is very interesting here is that if you see here in June, the price for 1 or 2 days, it went to almost zero here in UK. So it's funny, because people can tell you like, well, guys, you are saying that these prices, we never saw these prices, and the price is so crazy. And then we had here that the price was almost zero. So I think it's important to understand why the price went so down here. And the reason is that, as I said, in summer, the UK, they receive a lot of LNG, a lot of ships from US. So the thing is like, at that point, a lot of them came. And what is the problem is that, as I said, they do not have a storage, because if you have so many ships coming and you don't need the gas right at that point, you just storage that and that's it. But as they do not have a storage, what they did is just, it's coming, so they burn it like crazy. So at that point, there was a lot of them, a lot of gas coming from US. So the gas from the North Sea was not needed. So this is why it went almost to zero. But as you can see, then in 10, 15 days, it went crazy up to 230 or something. So do not have any kind of storage. Also, one thing that you can see here, and I think Alejandro is really clear, is that the volatility is crazy.
Yeah.
I mean, you went from 15 to 250 in what, 10 days, 15 days?
Yeah, the last 2 weeks, 3 weeks have been crazy. The geopolitical risk is super high now with the Russian situation. And I think maybe it's important to stress here that the company commented from the early days, from the very beginning, that the intention is to apply a short-term hedge strategy. Capi, I think you all know more about this than myself, but we have seen some comments in the last few weeks from the company in the RNS that they have issued, that the situation is complicated, but I haven't seen them saying no yet.
Yeah, in terms of hedging, well, to be clear, they do not have anything hedged at this point. So that's a good thing, because some other companies, for example, Serica, they have a current hedge, at way lower prices, as you can imagine. So it's something that they are just waiting to take that out, and it takes time. So it's dragging them in a way. And then also, if you remember, the ones that are invested in Kistos, we had one hedge for a year from April past year to April this year, and also it was at a way lower price. And luckily, it wasn't that much in terms of production, but now they are. So there is appetite for IOG to do a hedge. We don't have any kind of data or information on what is the percentage of production that they want to hedge, and we don't have data on how long they are going to be hedging, or even, of course, the price. But I know that there is appetite to do a hedge, and we will see the way they do it. Because one of the problems with hedging is that you need to put a counterpart of cash that is quite high. So you need to put an amount of cash that is sitting there in case the prices are going crazy, volatility, so you reduce the counterparty risk. But what they told me, we spoke about this quickly before I left, is that probably they can do it without needing to put that money on that cash aside, or at least a relevant amount. So if they are able to do that, and for sure it's a good time to hedge now, right? Like, the curve is so good. So if they want to do it, I am the one, and people know me, I'm the one that likes surfing the gas. But if they consider that it's good to put like a 10, 15, 20, 25% of the production under a hedge, I think it's okay. For me, I always said that, it's not such a big thing. So yes, people be aware that they are thinking that, and at these prices, probably it will be a good hedge. We need to consider that. Okay, so let's move a bit, because I don't want this to be way longer. But in terms of the cash flow potential, so we know that there was a windfall tax here in UK that of course is impacting them, and one of the things and one of the problems for them is that it's starting, I think it was from May. The problem is that there was a huge capex spent before that date for IoT. So that's a shame because that won't be, something that they can put into the system to pay less taxes on the windfall tax. But yeah, they have expenditure to do, and the thing is, like, I don't even want to go into a lot of detail here because the rules are changing, right, Alejandro? So we don't even have the final rules, and I've been discussing with this with Alejandro before that they are looking to add the decommissioning costs, even if you invest in renewable energies, like clean energies, whatever. So the final rules are not there, so it's a bit talking about something that is not definitive, so it's a bit difficult. But the idea that I want to give here is that for companies that do have a lot of capex in UK assets, they can even pay less taxes than the ones that they were paying before. For companies that do not have that many capex, they will be paying more taxes. So where they are is I think that they are in the middle. That I don't think that they will take full advantage of the relief, that they could have. But I don't. I mean, they have capex, right?
Yeah,
Alejandro, maybe you want to say.
they have capacities to spend, but they opened our eyes a little bit during this conversation because we expected a low impact, but the reaction was the opposite, that they will be impacted because they point out that they have spent um, virtually all or most of the capex for the phase one already by second quarter of this year. They have spent all the contribution from this year to cover the capex for EOG, the 60 million in the last few years. So next big investment will come with network, and network investment decision hasn't been taken yet. It will be taken late in the year. So maybe next year they have more capex to reduce this new levy, but they are assessing everything right now. As you just mentioned, the final conditions of this energy profit levy are not yet finalized. The industry has pressure the government, and the new chancellor seems to be open to discussion with the sector. So we have to wait in the coming weeks. The final condition will be settled. Just we expect the NA profit levy to be reduced because you cannot push now the offer from the North Sea oil and gas producer, because now the UK needs desperately this oil and gas.
Yeah, and one thing also to be aware is that one part is the ring fence, like the new taxes. So that's there, and that's what Alejandro was describing now. But also, they have a lot of losses from previous years. You can see in this slide that is almost 200 million, and then non-ring fence is like 60 million. So that money, my understanding is also that is something that for the normal taxes outside of the new windfall is something that they can deduct, because there have been losses on the previous year. So mm from a tax perspective, I would say that they are in a really good spot as compared with other companies, because they have these losses, and also they will have some relevant capex, and we will see the final rules if there is something that can help them. So I don't think that for the next, let's say, 2 years, taxes will be the big problem here. That's all I can say as a kind of summary. And yeah, the futures, as I said, December is 443 Ps per term. Is that price is just insane. Cash flow potential, it depends a lot on Southwark. When Southwark is coming in, and yeah, so there are here some calculations that they gave. So they are expecting, well, they are producing already around 60 million standard cubic feet per day by the end of June. So they were producing at a really high rate. And then it depends how it will work for the whole year, because they were giving an estimation, and what they told us is that, yeah, that number between the low range and the high range of the estimation for the whole year is depending precisely on southward, right? Like if southward is coming sooner, we will go to the top of the estimation, and if southward is coming later in the year, we will go to the bottom. So yeah, there are here some estimations on the potential cash flow for this year. And one thing, and we have been discussing this before with Alejandro before we started the video, is that there are very rough estimations here. So that's a number that you cannot take for sure, if we can call it that way, because there are a lot of estimations and there is a lot of information that we don't have here. So we tried to do it in the best way that we could. For me, I must say that, to be honest, I am not a big fan of modeling things with a lot of detail. I just prefer to understand where the company is, where the macro is, all the macro environment for those companies, where they are going. So for me, 97 million or 90 or 103 is not that important. The important thing is that the gas price is crazy. There are no signs that the gas price will go down. In fact, it will go up in the coming months because of winter and all the things that we told you, and they are going to be printing money like crazy. And if they are able to put Southwark online soon, it will be just so much money, and this will need to go up. And if they don't go up, I will buy more. So kind of simplify way for me. But I know that there is other people that for them this is important, so this is why I have it here. But for example, I can see here those prices. I mean, this is not gonna go to 100 next year in my view.
This is an estimation. It's not a fair case, but it's a conservative case.
Yeah.
There are a lot of things that we don't know. We don't know the final production level for software. We don't know what will be the final tax rate. We don't know what will be the general administrative costs that are not yet estimated. We expect them to increase. Of course, the gas price is the major variable thing here that we can be sure. And also the production, even for Blythe and Elwood, we don't know what will be the final production once the final solution for the chemical injection fall is in place. So there are so many uncertainties. Maybe even if the cash flow generation is super high, they can refinance the bond sooner than in the first quarter of next year. There are many variables that we don't include here. We just want to show the potential. This is only to show the potential. Not this money as a very accurate model, because it's not. The idea is just to show an overview.
I mean, they are going to be printing money like crazy. So for me, this is why I prefer to focus more on the operational side. Because if we know the company now enough that if on the operational side they are doing well, you know that they are going to be making a ton of money. And that's it. And they have clear plans that they want to use that cash flow to develop their assets, that they have like 1 million assets to develop. So all those kind of things for me are even more important. And even for me, and I have like 55% of my portfolio, personal one, is on North Sea gas, because at the end is like these prices are crazy, but sadly they are demonstrating that they are sustainable. I mean, I remember 9 months ago people was saying, well, yeah, wait, because in May, like it's summer, starting summer, and probably the war is over and Russia will be pumping gas like crazy again. No way. I mean, Russia is not going to be pumping gas ever again. I mean, there is no cheap gas anymore. I'm not saying that a TTF of 150 is going to be the new normal. I think it will be the new normal for, let's say, the next 18 to 24 months. But after that, we are not back to 15 euros either. So probably the new normal is like 60, and I'm speaking in 5-6 years. So based on that, these companies, the assets that they already have, most of them they are in net cash already. They're going to be printing money like crazy. So those things for me are more important than if they are doing 94 million, or they are doing 91, or they are doing 100. But that's the way I. And just to close here, more details from the call. Yeah, as I said, there is that potential tax advantage that they have because there are a lot of losses that they have from previous years. In order to increase the capex and reduce the taxes that they pay, they will go after Kelham. We had a conversation that it was really funny. If UK is considered a tier one jurisdiction, after the new windfall taxes, etc., and I don't think it is. That's my personal view, but I'm
Everybody
gonna
will.
reserve. Yeah,
It was.
everybody was
Yeah,
laughing. Absolutely, yeah. And that's it. That's the company. It went down for almost like the low 20s for some time, and now is in the low 30s. Some volatility here for sure, so people need to be aware of that. And yeah, I hope that people like the video, and you can put some comments in YouTube. And soon we will have more English videos also from other energy companies that are coming probably in a couple of weeks. So we will keep you posted, and I want just to thank you again, Alejandro, for all the help with IOG.
it's a pleasure.
Okay, so thank you everyone, and I hope that you like the video. Take care.